Housing market? Is a crash on the horizon? Hey folks, so spring is here, and you know what's interesting? Despite all the buzz, the housing market isn't showing any signs of crashing. It's pretty stable, actually. But wait, there's a lot of talk about us hitting the biggest housing meltdown we've probably seen in a while in the US. Still, when you actually take a peek at the latest price stats, there's not much drama happening. Sure, we're seeing a bit of a dip right now, but in the grand scheme of things, it's barely noticeable. It's more like a tiny hiccup when you think about the wild ride we've seen in home prices since the start of 2020. We're talking about a period where home values just touched sky high, and now this little drop feels like a minor slowdown after a roller coaster of growth. Okay, let's hit the rewind button for a sec. About 3 years back, this massive event totally turned everything upside down. And yeah, that included the housing market. From March 2020 to June 2022, it was like someone hit the turbo button on home prices. Median home prices took off by 43% according to the Case-Shiller Index. We're talking about a growth spurt that nobody saw coming. Investors were making a killing. Homeowners suddenly found themselves sitting on a pile of equity, and buyers? They were pretty much on the sidelines, watching the numbers climb higher and higher. But then, it rolled around last summer, and whoa, did things start to switch gears. The market, which had been heating up like crazy, hit a peak with that 43% increase and began to chill out a bit. Prices dipped by a 3.6% drop from that high point. Now, I know that might not seem like a huge deal, but compared to the wild upward trend we've been seeing, it's definitely a change in pace. And here's the thing. To roll back to the prices we saw before all this craziness started, we'd still need to see a drop of around 28%. So, while we're seeing a downfall, we're not exactly back to normal yet. It's like the market's taking a deep breath after a non-stop sprint. The market, which had been buzzing and booming, reached its peak with that massive 43% rise. And then, it started to cool down, almost like it needed a break. We're talking about a 3.6% drop from the peak. Not huge, but definitely noticeable after that wild climb. But get this, to get back to where we were before this whole roller coaster started, we'd need prices to drop another 28%. So, we're seeing prices come down. But it's not like we're back to the good old days. It feels like the market's pausing for a second, catching its breath after running a marathon at lightning speed. This shift from sky high to a slight dip is more than just numbers changing. It's a sign, a hint that maybe things are starting to settle down. But let's be real, we're not quite at the point where we can say, things are back to normal. It's like we've been on this wild ride and now it's slowing down, but we're still not sure what the next turn will bring. So, while things are cooling off, we're still in this zone of unpredictability, waiting to see if we'll level off or if there's another twist waiting for us in the housing market saga. Alright, let's dig into what's actually happening in the housing market. You see, a 3.6% drop in prices might not ring alarm bells at first glance, but there's more to this story. It's kind of giving off vibes similar to the situation back in 2008. The latest from the Case-Shiller Index is showing prices have been dropping for 5 straight months. That's pretty unusual, like, it's only happened a couple of times since 1986. So, even though it seems like a small dip, it's a pretty big signal. It's like the market is whispering that something significant is shifting. Now, a lot of folks say that we're in what you might call the denial phase of a potential housing crash. Private sellers are still clinging to high asking prices, trying to maintain this image of a market that's still booming. But here's the real deal. It's not the private sellers who usually drive market trends. It's the builders. These builders are big-time players selling heaps of homes. They've got their finger on the pulse of the market and are super quick to reduce prices to make sure they keep selling houses. Lately, nearly every big builder out there has been cutting prices and attracting buyers. So, even if it looks like everything's calm on the surface, the new home market is actually showing some clear signs of pressure. And here's the thing. What's happening in the new home market doesn't stay in the new home market. It starts to spill over into the market for existing homes. Imagine you're considering getting an existing home, and suddenly there's a new build down the street slashing its price by a whopping 20%. That's going to make you think twice about where you put your money, right? These moves by builders have a ripple effect, and they're a big clue about where the market might be heading. So, here's a heads up. Don't expect the housing market to do a complete 180-degree turn overnight. Think of the real estate crashes as a creeping change that starts with the big guys, the builders. These changes then gradually influence the rest of the market, and it takes a good while before the full impact is felt. Take the last big crash as an example. Back in July 2006, home values hit their peak, then they started this slow slide downwards. Fast forward a year, and they were down by just under 2%, 2 years into the crash, and we're looking at a 10% drop. But get this, it took almost 6 years for the market to hit rock bottom, dropping 27.4% in total. What this tells us is that housing market crashes are anything but fast. It's a slow, steady decline that takes its time to really shake things up. And it's not a smooth ride down either. It's more like a roller coaster with all its twists and turns. You'll see moments where things seem to be getting better, only to be followed by another dip. It's a mix of hopeful and tough times, full of surprises that can be both frustrating and eye-opening. So, while we're seeing signs pointing to a potential slump, remember, it's a long game, and we're in for a journey that'll have its fair share of unexpected twists. Owning a home is everyone's dream out there, but with the way house prices, interest rates, and our paychecks are right now, something's gotta change. History's telling us not to hold our breath for our paychecks to catch up with these rising prices and those high interest rates. They're probably not going anywhere fast. So, what's left? Looks like home prices will have to come down. Have a look at this affordability chart I put together. It's pretty clear that buying a home today is tougher on the wallet than ever. Imagine this. The average person buying a house in 2022 is giving over more than half of their income just for the mortgage. That's even higher than back in 2008, and we all know how that went down. So, here's the deal. If regular folks can't afford to buy homes, there's going to be a lot more houses just sitting there waiting for buyers. That means prices will probably start to go down. But hey, don't expect this to happen overnight. It's a slow-moving train, kind of like what we saw starting in the summer of 2006. Looks like we might be in for a similar ride over the next few years. Let's wait and watch. That's all for today, everyone. Thanks for hanging around and diving into the housing market with me. If you found this interesting, go ahead and hit that like button, subscribe for more, and let me know in the comments what's up with the housing market where you live. Let's keep the conversation going.